Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you. In today's little program, I want to discuss or do an update on something I was talking about earlier this morning, related to a certain UK Prime Minister, and look at the impacts that might have on the market. As well as that, I want to talk a little bit about a certain event happening tomorrow. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So this morning we were talking about the farce that was happening in the UK in relation to Boris Johnson. And the latest developments is in fact, he has finally resigned. He should have resigned yesterday when over 30 officials resigned. He should have resigned then as UK PM, but he's finally came out this afternoon around about 12:30 local time, and finally announced his decision to resign. However, is not so straightforward, because Johnson will, however, stay on as a UK caretaker Prime Minister until a new leader is in place. Because obviously the sitting government, which is a Conservative party, has to elect a new leader. This is how UK politics work, and that may take a little bit of time. But anyway, there's quite a few people who are not happy with that. What Johnson actually said during his resignation, he actually said, "I am sad to give up the best job in the world, but them's the breaks." He was always a fantastic speaker, wasn't he? Of course, I'm being sarcastic. But anyway, a new timetable of when a new leader will be appointed. We will be the new Prime Minister, will be given next week. But like I say, not a lot of people are happy with the fact that Bojo or Boris Johnson is going to stay on, because many MPs want him to go now. Tory MPs, they want him to leave now. And Labour, the rival party in Parliament, has warned if Johnson stays, they will try and bring a no confidence vote to Parliament. So again, this story is still may have a few twists and turns yet to go, but be interesting to see the development of that. But anyway, he's finally made the right decision to leave the big job. But anyway, let's have a see what the impact that had on, say, the sterling. So let's have a quick look at it. Now, this is the sterling, okay? Now, funny enough, just after I went off air in the morning program, rumors went out, literally about 2 minutes after I finished my last live in the morning. Rumors went out that Johnson was going to resign. And the sterling got a little bit of a boost on the back of that. As you can see, it was here around the time when we were talking this morning. And then on the back of that, it started to rise quite dramatically, not over the top dramatically, but that key level, remember I mentioned this level in the morning, the one I'm keeping my eye on, the 120.0034, which is a potential area of resistance. That did indeed hold, and it then pushed the sterling back down. So, it gave it a mini boost, but not a massive boost for the sterling. So like I say, that level, which I've been watching, managed to hold. If we have a look at the euro sterling, okay, same thing, better strength initially on the back of the announcement that Bojo was going to go. But then after that, we can see the euro's had a bit more of a recovery on it. That level I was watching, 0.85 146 is now being a potential area of interest as a resistance. So it's currently trading at 0.8558. But again, I say this, I think, is not politically driven. The sterling is a little bit politically driven, but the euro has its own problems, as we all know already. So, what's my feeling on all this? I mean, obviously, I've discussed politics quite a fair bit. And like I've said before, sorry, my throat's a little dry. As I've said before, the sterling can be quite politically driven. However, the only real massive fact that politics can have a big impact on the sterling is if there's a change in government, because a change in government often means a change in fiscal policy. Now, a change in leader doesn't necessarily mean that, because when Boris does finally leave the big job, the monetary policy that the sitting government is currently put in will probably stay the same. Okay, so that won't necessarily change. And don't forget, at the moment, the UK is facing some really shocking data. Inflation at 9.1%, high since 1981. Interest rates, they've moved to 1.25. Unemployment was higher last month at 3.8. UK GDP is currently at negative 0.3%. So this is more important on the sterling than Bojo in general, okay, at the moment. This is more important. It's more about the market data or economic data, and the fact that obviously the UK is on the brink of recession, and the fact that the world is actually a little bit fearful, and that's why we're seeing dollar strength. So that has more of an impact on that than Bojo did. Though, like I said, he had a little bit of excitement, and we look at it. But at the moment, the market's now taken their eyes off him, and they've looked back at what the real picture is, and that is potential economic slowdown, increase in interest rates, and a potential recession hitting the UK. So anyway, moving on. That's enough about Bojo. I spoke about him too much now. So let's leave him far behind and move on to something else. Now, let's move back on to the euro, because obviously everybody's talking about the single currency at the moment, and when and if and when it might go to parity with the US dollar. Now, as I mentioned earlier this morning, there was it's ECB June's meeting accounts was going to come out, okay? And like I said earlier this morning, it's a medium event. It's not usually a massive event, but it's but I said with the story about the euro at the moment, it might be worth keeping an eye on and having a look at what is said, because it's like the FOMC minutes, basically. It's the equivalent of the FOMC minutes. But basically, this the ECB June's meeting accounts showed that some members were open to the idea of a larger rate hike in July. Some of them were. Okay. Now, again, don't forget, the euro has often had this problem of their camp is really heavily split down the line between the doves, like Lagarde, the president of the ECB, and a few hawks. So my way of thinking, I think, though it only said some members were open, the general consensus is that Lagarde will go with what she thinks is the right move to do, which is gradual increase of interest rates, which should be 0.25 basis points. Though I know that clearly some members of the ECB wants to go to 50, a bit more aggressive. So what was the impact on the euro? Well, to be honest, pretty disappointing. It didn't give euro much of a boost at all. And as you can see, like I said, because I really think there was too many. It only said some members. It didn't give an impression that there was more hawks in the ECB camp. The euro didn't really react, and it's still under heavy pressure by the US dollar, trading currently at 1.01714. So yeah, still under pressure. Still got an awful lot of dollar strength with that. What else has happened today? It moves me on to something I really want to talk about again as well. And that is basically, we have the US initial claims announced about 45 minutes ago, and it came in at 235,000 versus 230,000 expected. Now, don't forget, US initial jobless claims, okay, means it's the initial number, or it's a number of people in that week for the first time signing on for unemployment benefit. So basically, last week, 235,000 people signed on for unemployment benefit for the first time. Okay, first time. So obviously, they have a population of over nearly 700 million, but 235,000 unemployed people is still pretty shocking. But what was this, the thing about this, and what I want to talk about this is that obviously expectation was 230, so it's higher than expectation. But if you look back at what the initial claims have been over the last 12 months, you can see a steady increase in initial jobless claims. Okay, last week it was 231, week before 233. Okay, 231 again. But the week previous to that was 202,000. Then it was 217,000, 218,000, 197,000, 202,000, 181,000. So slowly but surely, you can see a steady growth in unemployment. Okay, people are signing on for unemployment benefit. Now, there was this old saying, my old mentor taught me, that the jobless claims, the market tends to ignore, but really it's like a canary when you're down a coal mine. It should be an early warning system, okay, that you're about to face economic trouble when you start to see a rise in initial jobless claims. So now I'm beginning to, that should begin to pay attention to that. The market hasn't really looked at it. We've still got the same old dollar strength, though the market is indeed slightly calmer today. Some of the indices are performing a bit better. But, the initial jobless claims, because it comes in weekly, it's like I say, it's like a canary under a coal mine. It's an early warning system to maybe you're about to face economic strife, which brings me on to what's happening tomorrow, which I wanted to talk about. And that is, excuse me 1 second. Sorry, really try again. And that is the non-farm payroll, which of course, as you know, I'll be doing a tixee live watch along with that tomorrow. Expectation is for it to come in at 270,000. Now, the NFP used to be a major event. It used to be a major event. Back in the day, I remember when I was trading, the NFP was huge, certainly for currencies. Not such a major event now. However, as I keep saying, the Fed and many central banks keep saying that the economy can handle these interest rate hikes, because the labor market is strong. Now, as I already pointed out, we can see a steady grow in initial claims, early warning sign, canary in the coal mine. But if we have a look, excuse me, we have a look at the NFP numbers, for a couple of months back, last month, this month it was expected at 270. So 270,000 new jobs created. May, it came in at 390,000 new jobs created. April, 436 new jobs created. March, 398,000. February, 714,000. January, 504,000. December, 588,000 new jobs created. November, 647 new jobs created. October, 677,000. Now, I don't know about you, but I see a slight pattern in that, I see, again, an NFP number which is slowly reducing, which means there's less new jobs being created, which means also that firms are not hiring as many people either. So, again, this argument that we have a very robust labor market, I can see a pattern in decline. So I think the excuse for a strong labor market might start not being an excuse anymore. So, so I think, like I say, I think the watch along tomorrow could be quite interesting. I'm definitely be interested in average earnings, which comes out at the same time, especially with the story about inflation. But I think we need to keep an eye on that number. So like I say, don't forget, I'll be going live at 12:20 p.m. UTC to do a watch along of the NFP. Please come on. I usually go on 10 minutes. It's 10 minutes before the announcement. So we can talk about it first, have a discussion about it, look at some information on it, and look at potential outcomes. So please come along and join me for that. Let's have a quick look at some other things. We spoke about the cable, the euro. Let's have a quick look at some other assets as well. I've got a quite interesting thing I'm looking at for gold. And I had an interesting question. Somebody left a comment in reference to gold. And they know, obviously, I'm a gold bug. And they asked the question, obviously, gold is often a great hedge against inflation. And so, and obviously, it's a great safe haven at times of, concern and fear and things like that. So why isn't gold benefiting? Why isn't gold benefiting? The reason for that is obviously we've had an increase in interest rates, which also is affected a strong dollar. Gold is priced in dollars, so a stronger dollar means a weaker gold. Okay. At the same time, with the high interest rates, and we've had high bond yields, it makes gold more expensive to hold because it's non-yielding. So that is the reason I think gold has felt the pressure of strong dollar strength, high interest rates, and obviously bond yields, okay, being high. So that's put the pressure or taken the shine off the yellow metal a little bit. So, you know, will gold gets its shine again? If we do start entering recession, and there is clean signs of that, then I do think gold will start getting its shine again. But at the moment, it's losing against the strong greenback, bond yields, and high interest rates. But anyway, I've had a quick look at it. Obviously, it's currently trading at $1,742.90. If I put it on a daily, I've got a couple of levels I'm looking at. I put a Fibonacci retracement in as well. Okay, there is a current little bit of buying just above just below where it is, so around about the 730 level. I'm keeping a more of a close eye though on $1,727 level, and the reason for that is because if you look back, and this is how I sometimes spot levels, I go back on a daily or for longer periods of time, and I look at other levels where the market is bought in again, or other levels where it's potentially acted as a support. And as we can see, this level I've put in is often acted as a potential support line for gold. There's potential where buyers have gone in. So I'm just keeping an eye on that level and see what happens with that. Let's have a quick look at Bitcoin as well. Go back to 30 minutes. Let's have a quick look at that. Again, just above that level, hovering around that level, been looking at 20,355. Oil, let's have a quick look at oil. Let's have a look. Where's oil again? Daisy. Here it is, oil. Okay. It has had a slight boost. It's trying desperately to get back above $100 and $100 level. It's challenging that right now. It has been under pressure for several sessions, but it's trying to get its bite back. So yeah, oil is on the move a little bit at the moment as well. So yeah, that's the thing. So that's really the story. So anyway, key events, excuse me, key events to come. Okay, key events to come. ECB Lagarde, the dove, the queen of doves, I call her. She's speaking tomorrow. So it'll be interesting to see what she does. And again, of course, don't forget, I've already mentioned it. I've already said I'm going to be doing a watch along on the NFP and average earnings and US unemployment tomorrow. So please come and join me. Going on air at 12:20 p.m. UTC. Like I said, I think I'm seeing, and it's going to be interesting to see, because we're slowly, like I said, we're slowly seeing an increase in initial claims and they're slowly seeing a decline in new jobs being curated. So I'm just thinking we could have a big story on our hands with that. So please come along and join me. It could be exciting. It could be exciting. I'm not promising it is, because the NFP can sometimes be a pretty disappointing event, but come along anyway and we'll watch it together. European stocks, how they're performing, again, pretty tepid, pretty much where we left them this morning. FTSE up 0.43%. DAX currently trading higher, 1.79%. And Eurostoxx 50 currently trading higher at 1.31%. So yeah, don't forget, you can ask me questions anytime you wish. This is what I'm here for. It could be market related. You could ask me to maybe look at an asset, or we can just simply say hi, or we can even just have a conversation. You know, because that's what we're here for. It is live after all. So please feel free. And like I always say, if I know the answer, I certainly will answer it. If I don't, I'll go and find out for you and let you know. But yeah. Okay, well, if there is no questions, don't worry. Don't forget, if you think of a question later, jot it in the comments on either Facebook or YouTube. Okay, jot it in there. And yeah, and I'm more happy to, you know, like this gentleman did earlier on. He left a question asking about gold, why gold's not acting as a safe haven. So like I say, please feel free to ask me questions on the comments if you think of them, and I will reply to that question when I'm back online. Okay, as there is no questions, not a problem. Don't forget, if you're watching me on Facebook and you liked it, by all means, give us a follow. If you're watching me on YouTube and you like it, subscribe if you like. Click the notification button so you know next time I'm going live. And if you enjoyed this little episode and you find it interesting, insightful, and useful, and you put up with me and my over-enthusiastic nature when it comes to the markets, give me one of those. It's always nice to know that you're liking it. I see I've got 2 already, which I really appreciate. I really do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.